Okay, welcome, folks. For a while, I've been trying to make this screen record, but I keep finding out it kept on crashing and it wasn't recording the entire screen. So I had to go and get another screen recorder to finally make it work. So let's see how this goes. So the first topic I'll be talking about today is fair value gaps. Fair value gaps. So what are fair value gaps? In fact, before we talk about the fair value gaps, let me just give you like a little bit of explanation before we go into fair value gaps. So there are always gaps in the market, and they are called what? Imbalances. Let me repeat that once more. There is always gap in the market, and those gaps, we call them what? Imbalances. So a bullish imbalance is called a BC, which is what? Buy side imbalance, sell side inefficiency. While a bearish imbalance is called what? A CB, which is what? Sell side imbalance, buy side inefficiency. What do all this mean? Let's dive a little bit deeper. So a buy side imbalance, sell side inefficiency, which is a BC, the initial state of its delivery is when what? Price kept on pressing higher. When let's say we are buying now, so price kept on doing what? Buying, like that. So it was creating what? Those gaps, those imbalances in the market. So it was creating what? Those imbalances in the market, which did what? Created what? A bullish imbalance right there. So all those gaps in the market, they were lacking what? Sell side delivery to it. So that's why it's called what? Buy side imbalance, sell side inefficiency. So sell side has not been delivered to it, so that place has not been what? Balanced efficiently. So that is why it's called a buy side imbalance, sell side inefficiency, because sell side has not been delivered to it efficiently. For a market to be balanced, we need to see what? Buy side delivery, then what? Sell side delivery also, for that market to be balanced. But now we are in a buy program in the market now. It kept on pressing higher. We are only seeing what? Buy side delivery. There wasn't no sell side delivery to finally balance it out. So it became a buy side imbalance, sell side inefficiency. That is what those gaps mean. So it lacked what? Efficient delivery. So because of that, because only what? Buy side was offered. So let's continue. There is an imbalance in price. So until we get what? Sell side delivery into it, it stays what? An imbalance. So long as price doesn't return back into those imbalances, it still becomes what? A buy side imbalance, sell side inefficiency. So no what? Sell side efficient delivery to it. So we need to see what? We need to see price give us a sell side delivery for that inefficiency in the market to be what? To be balanced. So all this should be written in your notes. So when we start going to deeper levels of this stuff, you'll be able to grasp this concept of what I'm talking about here. And what? We don't need to even see this stuff happen immediately. Sometimes it might take a few minutes, sometimes it might take hours, sometimes it might take days, it might take weeks, it might take months, some it might even be years for price to finally come back to do what? Balance it out, depending on the what? Time frame and the and order flow for a particular period of time. So depending on order flow, that's how much that's how the inefficiencies are being balanced. So let's look at a bullish scenario, that is in a buy program. So looking at from this low right here, where is the first imbalance? Right here. You see this, for a BC to be formed, which is buy side imbalance, sell side inefficiency to be formed, we need 3 candles. 1, 2, 3. So if you see from here, from the high of this candle to the opening price here, if you see that gap there, that is what? A BC. Because when we started pressing higher like this, we were only seeing what? Buy side being offered throughout this place. There wasn't no sell side delivery back inside. So we kept on pressing higher again. We created another one here, this high to this low right here, another buy side again, and BC once more again. And what happened? We did not see what? A delivery back inside in that initial state. So this place right here, there's an inefficiency in this area here, like that. So this imbalance, it hasn't gotten sell side delivery back inside it to finally cover it, finish. So this becomes what? A buy side imbalance, sell side inefficiency. And how do we identify what? Our BC. We need what? 3 candles, and the middle one, we need that area in the middle one to do what? To stay on field. If we are looking at this example here, you see there's a little bit of gap right here. That is what we call a volume imbalance. That volume imbalance right there, anytime we see a volume imbalance in the market like this, we will attach what? Our rectangle from this high, then not to this low, we will attach it to the opening price here. So this is what I'm talking about, because there is a volume imbalance right here. So that's why we do what? We attach it from the high to that opening price there. So let's continue. Look at this BC once more. We see what? This high to this what? To this low right here. If you see the gap there, we did not get what? Sell side delivery into it. So this place become what? An imbalance right there. It's an imbalance. It's a buy side imbalance, sell side inefficiency, like you can see the name right here. So as price was doing what? Pressing higher on the daily, we kept on seeing those imbalances being formed, like that, until we reach this our final target, before we now get a turning point to start seeing sell side delivery. So during this buy program that was going up, what were we seeing? We're seeing BCs being created, BC being created, BC being created, BC being created. You even see one from here, this high to this candle here, that is a BC. From this high to this low right here, that's another BC being created, like that. And we are not seeing what? Sell side delivery back inside it. So all these are BCs. So until we reach a final turning point, that's when we now finally start to get what? Sell side delivery into it. So now, looking at this chart here, while I was showing you before, we were getting what? Buy side delivery, buy side delivery, buy side delivery. We did not see what? Sell side coming back inside, sell side coming back inside, sell side coming back, sell side delivering back into it, until we finally reach what? A turning point in the market. And now started getting what? Sell side delivery back to balance out this inefficiency in the market here. Get sell side delivery once more again to do what? To balance the inefficiency in the market again, right there. This high here too, like that, got what? Sell side delivery to do what? Balance all this inefficiency in the market here. Come down again, balance this what? Inefficiency in the market, until finally we got to the last BC in this range, in this entire range here. Finally got to where? The last inefficiency in the market. So what do price does? Price do what? Always seek for inefficiency in the market to do what? To go and balance it out. So it's just the time aspect, that the time is going to go back to balance it, that differs. So the time at which price goes back, if you look at, you can count all these days now. This is how many, I can't remember how many days all this was used to play out. Then finally After so many days of buying, then we finally started getting what? Sales back into it, until we finally balanced all the inefficiency that was created in this market. We finally did what? Balanced everything out. And you see, I'll show you an example of right here. If you look at this BC and we look at this I, you will see that this other candle dropped a little bit inside. So there is this portion that has gotten a little bit of what? Sell side delivery. So now we will anchor our rectangle. How we anchor our rectangle from here to here? We will now anchor this from here to this area here, because a little portion of this entire candle, from the high of this candle to the low of this candle here, a little portion of it has been what? Has been balanced already. So this remaining portion from the high of this candle to the low of this candle, right there is still inefficient delivery of sell side to it. So later, at a later point, we did what? We balanced it out. Right at this moment, we got what? Sell side delivery to finally do what? Balance this area. Immediately this area became balanced, you see what? Price start to do what? Leave it. That is how price does. We look for inefficiency in the market and do what? Balance it out, then start to move in that in the direction of order flow, and immediately start to leave it. What does it create again? Another inefficiency. Again, another inefficiency in the market. Like that, we created one here, price did what? Came to balance it out. Finally we moved up again. By the time we are going to move up once more again, we did what? Created what? Another inefficiency, like that, until we reach the major turning point. We started getting sell side delivery, until we finally balance all this range out, like that. Let's look at this example too. From this high to the low of this candle, you see what is lacking? What? Sell side delivery into it. So this BC right here stays an imbalance. If you watch the high of this candle, to the low of this candle, you see that inefficiency there. But what do we get here? A little bit of delivery has occurred here. So now, from the high of this candle to the low of this candle right here, that place is what? That area hasn't been what? Balanced out. So when we are anticipating for what? Price to do what? Finally later come back to it at a later point in time to balance this out. But even till the time I'm speaking right now, we've not seen what? An efficient delivery back inside it. Price will refer back to it at a later point, probably years later or months later. So it depends on the order flow in which the market is running at that moment. So let's go to another scenario. Look at this one right here. If you look, this was the example I was just giving you. No, this wasn't the example. But look at this area here. You can see what? An efficient delivery of price back into this portion of this market here. So this place has been what? Finally what? We still have a little bit of portion left open, but majority of it has been what? Has been balanced, because we've gotten what? Sell side delivery into it. So majority of this area here has been what? Has been balanced. Look at this example right here too now. When this price was still what? Offering buy side, like that, we kept on pressing higher. What do we have here? This BC formed. Immediately we finally take out what? Buy side liquidity, then finally tag into what? And a imbalance up there. We started getting what? Closure of what? All these BCs. We started getting closures of all these BCs. We started getting what? Sell side delivery back into them, like that. Finally we got inside this one here, and we did what? Finally did what? Efficient delivery to what? Inside here. You can see how the market drops back inside it and fully closed it. So it does what? That this area here now has been what? Efficiently what? Delivered to. And finally we start to leave it once more. So that is the first thing first. Imbalances in the market. Let's look at more imbalances to get us, to get us in sync with what I'm talking about. So we know. So when I start talking about fair value gaps, you know what fair value gaps are. So first, I'm showing you what the imbalances in the market and how price do what come back to do what fill those imbalances. So now this is a bearish scenario here. Now look at this high, this low to this high. When price was dropping lower all this while, what was happening? There was no sell side delivery to it until we finally reach a key turning point below in this area here. We finally got what buy side delivery back inside it for this place to be what finally what and efficiently what delivered to. Finally this place was what efficiently delivered. We got what buy side delivery. So for an imbalance, for a sell side imbalance to be what to be balanced, we need what buy side delivery. For a buy side imbalance, which is what a BC, for a BC to be perfectly balanced, we need what sell side delivery. So the opposite of that is what we see in what the sell side part of the market. For a sell side imbalance to be finally balanced, we need what buy side what delivery into it. So that is literally what happened here. We got buy side delivery and this area became what efficiently what balanced. So let's continue. Let's look at this example here. Look at this huge BC right here. When it was dropping down, what do we have? We have this market create what this huge imbalance here. So what was it lacking? It was lacking what buy side delivery. It was lacking what buy side delivery back into it. So this area here was what a sell side imbalance, buy side what inefficiency. So there is no efficient delivery of what buys into it. So until we get that efficient delivery, this place is still, it remains what a sell side imbalance, which is lacking what efficient buy side what delivery. So at a later point, finally after price drop lower, reach an initial target in the market, we finally get what a reversal back inside it. Then we did what get that our buy side delivery back inside it, which made this place became what a balanced price range right there. So when this area of the market was lacking what sell side buy side delivery, when this area of the market was lacking buy side delivery, price kept on referring lower. Then finally we reach a turning point in the lower portion of the market. Now finally get what back a closure of all this what CBs that was created during this initial drop. We finally do what balance it out perfectly right there. Let's continue. Look at another example of it. You can see here a volume imbalance was created here again. So we anchor what from this high to the opening price here, so that price over there, that is how we anchor it. And what do we get? Buy side delivery to what to finally balance this inefficiency that is an imbalance. So now price did what finally balanced it out, giving it what efficient what delivery. Let's look at different scenarios. Look at this area here too. What do we see? From the low of this candle to this opening price here, that is the entire portion of the CB. Because of what we have what a volume imbalance. What do we see here? Price doing what? Finally doing what? Balancing out this entire place here, like that. So that is how gaps in the market are being what? Balanced. So let's go back now to our initial topic, fair value gaps. Now I've shown you what how price does what for efficient delivery in market. Price, if we're in a buy program and we kept on having buys like that, for that area to become balanced, we need what? Sell side to be what? To be delivered into it for it to become what? A balanced price range. So for sales too, when we're having sell, what do we need? We need what? A buy finally to what? To cover all those imbalances that has been created in the market. We need a buy to do what? Cover those imbalances for efficient what? Price delivery in the market, which I've shown you in that first example. So now let's go to fair value gaps. Now I said here that price move from what? Premium to discount, and what? From discount to premium. This is how the market works. This right here is a perspective. I'm not just saying price moves from premium to discount to premium. This, listen right here, this is a perspective which I'm bringing to you, that price moves from what? Premium to discount, and discount to premium. You should take that in your notes. You should not forget about it, because this is one of the lens at which you'll be using to what? Look at markets when you are about to what? To take trades on them. So let's continue. A bullish fair value gap, which is what? Our BC. When price comes down into a discount array, what did I say? Price move from what? Premium to discount. So price is coming from what? A premium side of the market. It's coming back down into what? A discount array, which is our bullish fair value gap, to offer what? Buys at what? A fair value. Why that BC? When price was dropping down back inside it to finally what? Cover that inefficiency in the market. Immediately price finally what? Reaches that place and balance that area out. We will always do what? See price, leave it. If that area in the market is a bullish fair value gap, you will see what? It offering what? Buys at fair value to what? To smart money to do what? To buy it back up into what? A premium. If that gap, that BC in the market is a discount array, if that BC in the market is a discount array, it will offer what? Buys at what? Fair value to the market, to smart money to do what? To buy it back up into what? A premium. That is when it is considered what? A bullish fair value gap, because it does what? Offer what? Smart money to buy it at what? Fair value. Oh my goodness, my throat is so dry. Need some water. Let's continue. A bearish fair value gap is when what? Price goes from what? Price goes from what? A premium. Price goes from what? A discount. It goes from a discount. It goes up into what? A premium. When price goes up into a premium array to offer what? Sales to what? To offer sales at what? Fair value to smart money. My bad, I forgot to write money here. To smart money to do what? To sell it down into what? A discount. Like that. So if we want to say we are looking for sales, anytime we say we are looking for sales, we need to do what? To see what? Price going what? Into a premium first, goes up into a premium, then finally offer balance out what? A CB that is there. That's a sell side imbalance, buy side inefficiency. Once we see it, balance it out. And if that CB is in what? In a premium array, we will see what? It offer what? Sales at what? Fair value to what? To smart money to do what? To sell it back down into what? A premium, into what? A discount, sorry. So that is how the market functions. But let's continue. Let's see examples of it. So let's use this our previous example, or in a bullish scenario now, to talk about what? A bullish fair value gap. This looking at this area here, from this low to this what? To this high is an entire range. What you are seeing here is a Fibonacci. This Fibonacci is used to help us identify what? A premium aspect of the market and what? A discount aspect of the market. So how do we identify our premium and discount? From this red line here, this is our 0.5 of this our Fibonacci level to this 0 level. From the 0.5 level to the 0 level is what? Our premium area of this range here. And from the 0.5 of this market to 1 is what? Our discount level of the market right here. So this is a dealing range in the market which has been created right here. So if we are looking for buys, what do we expect? We need to do what? See price do what? Come back down into a discount and either look for what? A fair value gap to do what? That is a BC. When it finally do what? Balance that inefficiency in the market. We now need to see what? See it give us price at what? A fair value. This is at what? A discount price to give us what? Buys at fair value to do what? To buy it backward up. So what do we get here? You can see what? Price this is what? Because you can see there are also what? BCs here. BCs here. But why does price not offer us to just buy there and continue pressing higher? Why? Because this area of the market, even though these BCs were formed in this area here, they were nowhere in the discount aspect of the market. They were not what? In the discount aspect of the market. And if you notice, when price dropped down into this BC, dropped down into all this, you see he kept on doing what? Selling lower, selling lower, selling lower, until we get to what? This 0.5 level. And immediately you see us getting to the 0.5 level, what does he offer? It offer what? Buys. It offer buys for a while. He came back one more time into the remaining portion of this what's it called? The BC. It did what again? Offer another buy once more again to the what? To smart money to do what? To buy it back up. But we've not reached to what? A discount, a deep discount for us to finally get a huge turning point. So we continue what? Pressing lower. Finally we get to this area here, which was where at the deep discount of this entire range. So we did what? Immediately dropping back inside it, we finally did what? Balance out this entire BC right here. And what do we do after balancing out that entire range? We begin to what? Offer what? Smart money what? Buy. We need to offer smart money buys until we do what? Finally once more we did what? Leave what? The discount area and do what? Sell the started doing what? Offering what? We offered buy side to smart money. We offered what? Buys at fair value, yeah, at a discount price at fair value to smart money to buy it back. Where immediately we leave this discount area and we got up above here, we've now reached what? A premium area. What is just right there? A swing high, which is what? A buy side liquidity pool. A buy side liquidity pool. An imbalance. That's what? A CB right there. We did what? We went to what? Balance this area finally. Then finally immediately we did what? Complete this objective here of balancing out this area. Then we now start getting what? Another rotation lower once more again. But we did what? Offered what? Smart money what? Buys at what? A fair value to buy it back. Where you can see the buys never stopped in the discount area. When the buys stopped at what? Above what? The discount. When we got to what? A premium. After buying it back into a premium, now we sold it to the premium guys. So premium now, they're now selling it from where? they sold it from a premium back into what, a discount. So that is how the market works. It goes from what, premium to discount. Price is going from what, a discount to a premium. Immediately we got into a premium, we did what, we came from what, premium back down into what, a discount again. Immediately we got back into a discount, we did what, went from what, a discount into a premium. We did what again after we got to a premium, we came back, we from the premium area we came back down into what, a discount. So that is how price moves. I'll show you more examples for it to be in sync with what I'm talking about. From this low to this high, what did I say this area is? From the 0.5 to 0 is what, the premium area. And what do we see price do? Come back down from premium to what, a discount area. And what is just here, a fair value gap. To do what, to offer smart money what, buy. To do what, to buy it where, back into what, a premium area of the market again, like that. So you can see this occur every single time. Let's check out another example. From the high of this, from the low of this candle to the high of this candle, what do we see? A return where, below what, so a return below what, the this 0.5 level, back into what, a discount area. Even if it was just for just a short time, we came to do what, offer what, buys to what, to smart money at what, fair value, to do what, to buy it back up into what, a premium, like that. Let's check another example out. From the low of this area here, we created another entire range again to the high of this area here. What do we see? Price leave. Immediately we got into another premium level of the market. What do we see price do? Return back what, into what, the 0.5 level again, which is what, our discount. This area 0.5 to 1 is what, our discount level. So it drops back down into this discount area again. See what is there, the remaining portion of this area that wasn't balanced out. When price drops back, then the remaining portion, it finally came to do what, balance it out once more, to do what, offer what, price at what, fair value to what, to smart money, to do what, buy it back into where, the premium level of this range once more again, like that, until they do what again, fill up what, this what, another imbalance in the market, which is what, a CB, sell side imbalance, buy side inefficiency. Immediately we see them balance out this area here that wasn't balanced before. What do we see again? Another return from what, a premium area into what, a discount level once more. It's taking out sell side. Now this one, what do we just have? Just at this point here again, another what, discount what, array is just right there. And what do we see price do again? Leave it once more into what, the 0.5 level. And what is just resting above the 0.5 level? Another what, CB, another sell side imbalance. Immediately we balance it out, what occurs again? Immediately we balance this also right here, what occurs again? Another drop back into what, the discount area. And again, immediately price drops down here, there is what here, another fair value gap there. That is another discount of a range. Immediately price drops back into that discount level, what do we get again? Another buy into what, a premium level again. You can see price doing this all over and over and over again, every single time. Look at this one too, the low to this high. This is the 50% level. Where does it drop to? Drop below the 50% level. This gap, the gap from this 50% level here down here, that area is classified as the discount portion of this entire fair value gap. So the discount portion of this entire fair value gap, what do we see price used to do? It was used to do what? Send us higher one more time into what? A premium, offering what? Fair value. Offering what? Fair value to what? To smart money, to do what? To buy it what? Back to what? A premium level of the market. So we can see price doing this all over and over and over again in the market. So you can see this is not a superstition, this is not a contrived theory, this is not what, it is how the market do what, moves. look at this area here to now, from this low to this high. Where do we see price do what? It drops down to what? The discount level of this area. And what do we see price do? A reaction. We get a reaction from it. You see this jump right here back into what? The premium level of the market. So you can see this happen every single time in the market. Happen every single time in the market. Now there are some cases where we might not see on that our chart. We might mark out this level like this, but we might not see a fair value gap there. If we drop to a lower time frame more than this, we will actually find a fair value gap here. But there are also other arrays in a discount area of the market that they are not the only. It's not only a fair value gap that offer what price at fair value to smart money to do what? To buy it back up into what? A premium area. There is what? An order block too. Another block inside the what? From this 0.5 level to the 1 level. This is a discount what? Order block. And what do we see this order block do? It was used to do what? Offer us buys at what? Fair value to the to smart money to do what? To buy it back into what? A premium level here, which is what? They balance out this CB one more time, then they finally do what? Take out this high right here. Let's check out more examples. Let's see now bearish scenarios. Let's see bearish scenarios. Pardon me. If we are looking at this bearish scenario here, we see what price is what in this discount level. You see what price start moving from what? The discount level. It was reaching for what? It was reaching inside what? A premium level. And immediately we see price reach inside the premium level of this market. All was just resting there. This is what? A CB. The CB. This is the premium part of the CB. And what is the premium part of the CB offering? It was offering sales to what? To smart money to do what? To sell it down back into what? A discount. Right there. And also I talked about what? An order block. That an order block too can also do what? Offer what? Offer us what? Sales or offer us buys. As long as it's what? In what? This order block right here now is where? Is in the premium aspect of the market. So coupled with this premium CB right here, with this order block, we use those two to do what? To offer what? Sales down into a what? Into what? A discount. I will talk about another block in the next what's it called? In the next aspect of our teachings. But for now, we'll just still focus on what? Identifying what? Fair value gaps and identifying what? BCs and CBs in the market. So we identify what? The bullish fair value gap and the bearish fair value gap. So this right here is a bearish fair value gap. It does what? Offer us what? Sales at fair value to what? To sell it down what? Into what? A discount level in the market. Man, my throat is so dry right now. We can look at this area down here. You see what? Price move from what? A discount level to what? A premium level. What is next thing in this area here? This is what? A CB coupled with a volume imbalance. And what do we see? What? Price came back inside to offer what? Sales at what? Fair value to what? To smart money to do what? Sell it back into what? A discount area. Another example. I want to show you this perpetually until your eyes starts to see it. We leave what? A discount area. We came back to what? The premium area. Came back to what? Premium area of the market to offer what? Price at to offer sales at what? Fair value to what? To smart money to do what? To sell it back into what? A discount. Like that. Let's continue. Now look at this our example that we used before. This is the what? This portion here is the what? Is the premium aspect of this fair value gap. That's the bearish fair value gap right there. So this portion now, it was used to do what? To offer what? Sales to what? To smart money to do what? To sell it down into what? A discount. And what do we have here? Also coupled with the other block, which I said I'll be talking about in our next topic. So now let's look at this example once more. When I say, well, price leaves what? A discount to a what? To a premium. Look at the fair value gap there, the imbalance that is there. So when this market was dropping down like this in the initial state of delivery, it was what? A CB. Don't forget, it was when it was not filled up, it was what? Considered what? A sell side imbalance, buy side inefficiency. So immediately he created this range. Now we finally reach forth into it to balance it out. Immediately we balance a portion of this CB out. What do we see price do? Starts to do what? Price starts to what? Leave it, offering what? Sales to what? To smart money at what? A fair value. That is why it's called what? A fair value gap, because they are doing what? They are offering sales at what? A premium, offering premium sales to smart money to do what? To sell it down into what? A discount level. One more example. Okay, this is still the same example. One more example again. Look at this. The entire range here leaves what? Goes from what? A premium to what? A discount to what? A premium. And what? In the premium side, what do we just have next in this area here? I have what? A CB. That is what? A sell side imbalance, buy side what? Inefficiency. So at this point here, this area wasn't balanced. So it was lacking what? Efficient what? Buy side delivery. And what do we have here? Buy side delivery, efficient buy side delivery. So immediately we got here to finally balance out this area. We did another thing also. We crossed what? From what? A discount into what? A premium level. So that is why this sell and this place did what? Offer what? Sell to smart money at what? Fair value to do what? Sell it down what? Into what? A discount once more. So we can see this occur all over and over again. So sometimes you might see what? You can look at this area here, like this is also what? A CB, right? Why does this one not offer what? Offer sales to smart money to sell it back into what? A discount. Where do you see this resting? Is what? Is inside the what? Is below what? The premium area. So it cannot do what? Offer us sell. Cannot do what? Offer us sell, because this portion of it here is what? Is what? In what? A discount level. So it could not offer sales to us to do what? To sell it down into a premium. Until we got here, you can see we kept on doing what? Offering buy side, offering buy side, offering buy side. Finally we got to a deep premium area where this what? CB, this sell side imbalance, buy side inefficiency was resting. Finally we did what? Balance it out. After balancing it out, what do we get? Sell side delivery back to what? A discount area. So, and that is what? How the market works. So go back, study these things, go back to your chart, look at this thing over and over and over again. Study it until you finally do what? Come in sync with these things in the market. Once you can finally understand all this, you will now be able to move to the next level, to be able to understand order flow, how the market actually works, how orders in the market are being pulled, how we know, oh, this is where we will take our sell from, this is where we will take our buys from. How do we know all that? So after understanding this, we are now closer to understanding what buy and selling in the market, how they truly work, how the algorithm offer what buys to us, and how the algorithm offer what sells to us in the market. So until I see you next time, be safe.